Welcome to this explainer. If you're a fan of stark contrasts, incredible corporate strategy, and just a really good comeback story, you are absolutely going to love what we've mapped out today. We're diving deep into the numbers that define how Nokia transformed from a household consumer brand, one with a totally iconic visual style, into a massive, somewhat hidden titan of global infrastructure, completely surviving the collapse of its mobile phone empire. Here's a quick look at our agenda for today. We're tracking this dramatic corporate life cycle in 5 parts: the mobile phone monolith, the smartphone era collapse, the strategic infrastructure pivot, Nokia's new revenue engines, and finally, their massive bet on the AI network future. Let's get right into it.
Section 1. The Mobile Phone Monolith, Building a $290 billion empire.
To really appreciate their reinvention, we have to grasp the sheer scale of the mountain they fell from. And honestly, reinvention is just baked right into Nokia's DNA. This is actually a 160-year-old company. It's wild to think about, but they started way back in 1865 as a Finnish paper mill. Then came the 1967 Nokia Corporation merger. By 1981, they were already helping to launch the world's first multinational cellular network. And by the year 2000, they were dominating nearly a third of all global mobile phone sales. By the early 2000s, that market share climbed to an unthinkable 40%. 40% of the entire global mobile phone industry. They were so omnipresent, you didn't even use the brand name. You just talked in numbers. The 3310, the 6110, the 5110. And they had this totally unmistakable, iconic visual style. That classic utilitarian look with those legendary cases you could snap right back on. You could literally drop one of these things down a flight of concrete stairs, snap it back together, and make a call. They were the undisputed powerhouse. At their absolute financial peak, they hit a staggering $290 billion valuation. That didn't just make them a successful tech firm. It made them the most valuable company in all of Europe. They became a literal pillar of Finland's entire economy. When you've won the game that completely, carrying a Nokia business card pretty much meant you could get a meeting with presidents and prime ministers. Section 2. The smartphone era collapse. The cost of corporate hubris. Because as any analyst will tell you, a near monopoly usually breeds complacency. And the launch of the iPhone and Android changed everything. The internal culture at Nokia's top levels was just filled with hubris. When the iPhone launched, top management knew it was a threat, and they put huge pressure on middle management. But as reports from that era reveal, those managers tended to embellish their communication. They made over-optimistic promises and even distorted the reporting. So the top brass was kept under this cozy illusion that Nokia's big response to the iPhone was almost ready, while in reality, it was completely slipping away. That internal disconnect, it led to a totally brutal financial collapse. Mobile phone revenue plummeted from a towering $36 billion in 2007, crashing all the way down to just $20 billion by 2012. In merely 5 years, Europe's former crown jewel saw its share price collapse, hitting its lowest valuation in decades. Section 3. The Strategic Infrastructure Pivot, a masterclass in restructuring. Faced with an existential crisis, Nokia didn't just fade into obscurity. Instead, they pulled off what is arguably one of the most aggressive and successful strategic pivots in modern corporate history. And the strategy was incredibly clean, executed in 3 very deliberate moves. Step 1. In 2013, they sold off their dying handset division to Microsoft for $7.2 billion. Step 2. They brilliantly took that exact incoming capital to fund a buyout of Siemens, bringing their networks business fully in-house. And then Step 3, the big one. In 2016, they acquired Alcatel-Lucent for 15.6 billion euros. Executing that massive Alcatel-Lucent deal was a total game changer. They instantly broadened their diversification. They weren't just a wireless network player anymore. Suddenly they had optical and fixed networks too. This pushed them right into the top tier of global telecom equipment providers, capturing roughly 24% of the global market. They effectively traded the dying consumer phone wars for the highly lucrative behind-the-scenes infrastructure layer. Section 4. Nokia's new revenue engines, powering global connectivity. The crucial turning point here is that Nokia completely stopped selling devices to consumers. Instead, they became the company that sells the foundational technology telecom operators actually use to run their networks. Today, they make their money through 3 highly specialized streams. The largest is mobile and broadband networks. Then you've got cloud and network services to help operators manage everything. And finally, there's an incredibly unique, highly lucrative IP and licensing business. And the numbers prove that this pivot absolutely worked. Let's put this into perspective. By 2021, they were reporting $26.3 billion in net sales, generating a healthy 10% operating margin and $2.6 billion in profit. But what's even more telling is their resilience during the big 2023 market slowdown. Nokia maintained $1.8 billion in profit, while their closest rival, Ericsson, actually posted an operating loss. A massive, somewhat hidden driver of all that profitability is their IP moat. We are talking about a highly protective competitive barrier made up of intellectual property, painstakingly built over decades of telecom research. Today, Nokia holds more than 26,000 patent families. It's just a staggering portfolio. So, why does a massive patent portfolio matter? Because thousands of these patents are deemed absolutely essential to 5G technology. Nokia earns licensing revenue from companies across the entire mobile ecosystem. And here's the best part for them. Because this IP is already fully developed, a huge chunk of that licensing revenue flows straight to bottom-line profit. Nokia is quite literally embedded into the fundamental infrastructure of modern tech. Section 5. The AI network future. The next big bet. As any astute investor knows, you can't just look at a past restructuring. You have to look at the future. And Nokia's next bet is incredibly ambitious. They're aggressively targeting an enterprise market that's expected to grow at over 25% per year. How are they doing it? By betting the house on building artificial intelligence directly into base stations. There's a massive race right now to deploy mini data centers for enterprise apps, and Nokia is right in the thick of it, pioneering AI RAN, or radio access networks, in partnership with NVIDIA. In simple terms, they're using AI to optimize how radio waves actually connect your devices to the internet. They've undeniably executed a brilliant data-driven turnaround, reinventing themselves from a fallen consumer giant into an essential infrastructure titan is no small feat. But as we look at this massive shift toward physical AI and next-generation connectivity, the ultimate question remains, can Nokia win the race to define global AI networks for the long term? It's a bold new frontier, and I really hope this explainer has given you a much clearer lens to watch it all unfold.